Hello there, this is fairbinaryoptions.com. So let's write on the screen the fairbinaryoptions.com website. This is the Great Britain pound and Canadian dollar, and on the Great Britain pound and Canadian dollar, something really interesting it is forming, in the sense that we are witnessing a so-called rising wedge. I think that we've done this kind of analysis so far here, and this rising wedge started from these lows and all the way to here. We have the length of the first wave like this. Let's make it a first wave, and let's make it a bit bigger like this, and goes with red, number one, or the first wave. If that is the first wave, we need to see then the third wave. Then the third wave should relate with nothing but 61.8 when compared with the length of the first wave. So what to do here is to take a fib, a retracement, and then to measure 61.8 out of this length from here to here. Let's try to be as exact as possible. And then taking 61.8 out of it, the result would be the approximate length of the third wave to come. Why? Because in this arrangement, or in this, with this statement in here, let me take the fib, then we are saying that the third wave goes with this length. So we need to find the second wave to see where to put the second wave, basically to find where the third wave starts. Well, the third wave, by no means it starts from the lows, because 61.8 would not be enough. Enough for what? Enough to go and make a new high when compared with the first wave. A rising wedge is looking like this. One, 2, 3. Now the third wave goes and makes a new high when compared with the previous first wave. 4, 5 before anything. This is the rising wedge. This is the pattern. In other words, minimum to come would be the highs in here, and therefore our whole second wave should end from around these levels. Now the second wave being like this, it cannot end with this small place in here, but most likely with this one in here. In order to end with this one in here, we see that we have a series of 3 highs. So this is a high, this is another one, and this is another one. This is happening only with so-called running triangles. What is the running triangle, or our running triangle? Our running triangle here is from here to here we have the A and C trend line, and from here to here we have the B and D trend line. And by the time that the triangle has been broken, retested, we can say with some certainty that the second wave ends here. Well, if the second wave ends here, what the next step is to mark the level and to put this trend line from this moment on, as if you were to have an educated guess regarding where this third wave in the wedge is ending, then the educated guess would be that it's end, or it should end around 1.9440. That being the case, I am still favoring call options, and I would not go with end of week, but I would go with end of month, as at something like 1 week and 1 day from now, this market needs to be at higher levels than the current ones. So by the time market goes with above 1.95, then I would go and trade put options with as big the expiration date as possible being offered by the broker, or wait for the beginning of June and trade put options with 1 month expiration date, or stuff like that. This would be the trading plan on the Great Britain pound and Canadian dollar. We need to go like this for the third wave, and then to look for a fourth wave in the form of a triangle or a small zigzag or stuff like that. So the trading plan here is the following. we're favoring call options with end of month expiration date. End of month expiration date comes actually next Friday at 17 GMT on the 29th of May, and then put options by the time 1.9440 comes with end of month expiration date as well. Thank you very much for being here and have a great day. Bye bye.